Kevin Hincks, co-host of Fast Market, is with me. He's live at the CBOE. And as I mentioned, a lot of earnings here this morning and a lot of interesting pieces of news to discuss. Good morning, Kevin.
Good morning, Nicole. Yeah, as we inch closer to August 7th, tariff deadlines coming up there. August 8th, a Russia-Ukraine ceasefire deadline. We have a lot going on, but right now, the market's reacting to earnings. Not a lot of economic data. We did get a nice pop in mortgage apps, but all things considered, we're looking at economic data, and this is a day that we're waiting. We're waiting for headlines to come out on tariff deals or lack thereof. And so the market that was down yesterday, starting the day a bit higher, but this could really turn into a dry powder day, Nicole, as we wait for the news events coming up on Thursday and Friday.
Yeah, I mean, stocks right now, for example, the Dow futures are up 0.25%, the NASDAQ futures about 0.2%, sort of, leaning to the upside, been climbing the wall of worry, but still so much sort of on our shoulders, including the geopolitics that we've been dealing with. And today there's some more headlines.
Yeah, you've got Switzerland, their leadership in Washington right now discussing a better trade deal. Remember, they were hit with a 39% tariff when they claim that they don't have any big trade issues with the United States and are an investor in the United States, yet they're here in Washington to try to get a more attractive trade deal with the U.S. Will we get an announcement before the tomorrow deadline? We'll wait and see. That's what this headline-driven market is. But even if we do get something from Switzerland, even if we do get something from India, there's still going to be a lot of countries that their tariffs will take effect on the 7th. And then you've got Steve Witkoff in Russia talking to the Putin administration about a ceasefire. Remember, that deadline is the 8th for sanctions and more things coming on. So I think that is lingering on the horizon. Today we're dealing with a fair amount of earnings. Like I said, this week is not a very heavy week for economic data, as you know, and really today is the big day for earnings. So I think the headlines will really take the market the rest of the week, Nicole, and we'll see what they are. Because right now you've got, in terms of earnings, I'm sure you'll talk to other people about the earnings, but AMD is a little lower, Disney's lower, Supermicro, Snap is lower, McDonald's and now Uber are inching higher, so that's good news there. But there's a lot going on here today, but it's, like I said, this could be a dry powder day as we wait for that August 7th deadline, August 8th deadline.
I love all these earnings coming in. So many bits and pieces of news, to your point. I mean, you mentioned some of the names. I see McDonald's up 3.5%. Disney's down 1%. Uber was really exciting. A lot of conversations there with the beat and the buyback. We'll go through these names throughout the show. But the AMD weaker than expected there, not being able to really work with China anymore because some of the regulations that they can no longer send their chips over there in the same way. It was really interesting to hear some of the details from the CEOs from these conference calls. How about you also just expand on the mortgage apps a little bit? You said they were a little better. What do you think might be driving that, or what stood out to you? What were the numbers?
Well, interest rates, right? They are a direct reflection of the fact that the 10-year yield has, the 10-year note has rallied and the 10-year yield has come down. You had mortgage apps purchases up 1.5%, refinances up 5.2%. That leads to the composite being 3.1%. That is in contrast to last week's. All the numbers were lower for mortgage applications. So remember, the whole idea of lower interest rates, lower yields, the first thing that will show up in terms of stimulation is housing. And mortgage apps, housing data, that's what we really want to watch over the next couple of weeks. If the Fed starts to lower rates, if yields continue to come on the downside, watch the housing market. That could be the final part of the U.S. economy that hasn't responded to the strengthening U.S. economy. Why? Because interest rates have stayed at higher rates for a long period of time. So key second half of the year, watch housing, and mortgage apps today might be a start of something pretty interesting in the housing market.
Oh yeah, without a doubt. You mentioned mortgage apps doing better as yields came down, right? We were talking yesterday, when we see these numbers, I had it at the month that the 2-year was at the lowest since May. I mean, it's really evident how these have come down. So now, what are we thinking about the Fed? You have auctions that are happening.
Yes, well, I mean, today we'll get a 10-year note auction that we'll get the results of right around noon Chicago time, 1 o'clock Eastern. We'll get the results of that auction. Then tomorrow, a 30-year bond auction that we'll get the results of. So that'll be a nice, measuring stick for overall demand for U.S. debt. So remember, we talk about the shorter term notes, and the U.S. has been doing a lot of short-term notes, but today is the benchmark 10-year note, and tomorrow the 30-year bond. So pretty good, solid indications of how the U.S. economy is doing. But like I said, the Trump administration going with a lot of short-term notes to finance the government. Why? Because they think yields will be lower in the future. So they're waiting to finance that debt with longer duration for rates to come down. While they wait, shorter term notes.
Yeah, understood. All right, Kevin Hincks live at the CBOE. Breaking the news there bit by bit. We're getting closer to the opening bell. Thank you, Kevin.